Every single time in recorded human history that bombs have fallen on a foreign city, the first casualty was never a soldier. It was the savings account of an ordinary person. When the Gulf War began in 1991, the average retail investor watched their portfolio collapse within 72 hours, while the smart money quietly repositioned into assets that governments cannot burn, bomb, or confiscate. Today, as Iran launches missiles toward Israeli cities, and American naval carriers move into position across the Persian Gulf, gold is trading at $5,346.31 per ounce, up 2.20% in a single session. Silver is at $94.42, also up 2.18%. Bitcoin sits at $66,534. The question you need to ask yourself right now is not whether there will be a war. The question is whether your money is positioned on the right side of it. The biggest lie that retail traders believe is that war causes immediate, lasting market crashes that signal the time to sell everything and hide in cash. This belief is not a mistake. It is an engineered psychological trap designed by the very institutions that need your panic to fill their orders at the lowest possible price. When you see a missile strike on a television screen, your amygdala fires, your hands reach for your phone, and you tap sell. In that exact millisecond, an algorithm sitting in a server farm in New York or London is executing a buy order for 10,000 ounces of gold or 10,000 Bitcoin. Your panic is their entry. Your fear is their profit. The market does not punish war. The market punishes ignorance. History has given us a perfect blueprint, and most people refuse to read it. When Russia invaded Ukraine in February of 2022, gold dropped briefly to $1,870 per ounce in the initial confusion, only to surge to $2,070 within weeks, a gain of over 10% from the panic low. During the Gulf War in 1991, markets initially dropped 7% in 3 days before recovering completely and moving to new highs within months. The pattern is always identical. There is an initial shock dump designed to shake out weak hands, followed by a powerful safe haven pump as institutional money flows into assets that preserve purchasing power. The retail trader sells the fear. The institution buys the blood. Today, the geopolitical map is on fire in a way not seen since the Cold War era. Iran has launched a significant missile campaign targeting Israeli military infrastructure, and the United States has activated carrier strike groups in the region, signaling a direct possibility of American military engagement. Behind the visible bombs and the news headlines, there's an invisible economic war being fought with currencies, sanctions, and energy supply chains. Iran controls the Strait of Hormuz, which carries approximately 20% of the world's oil supply. Any closure or disruption of that strait would send energy prices into a vertical spike, which would trigger a secondary inflation wave across every Western economy. This is not speculation. This is energy mathematics. And energy mathematics always flows into gold. Central banks around the world have been accumulating gold at the fastest pace in over 50 years, and they are not telling you about it through the news channels that are currently showing you footage of missile explosions. In 2023, central banks bought over 1,050 tons of gold, a record. In 2024, they bought even more. And right now, as the Iran and Israel conflict escalates, those same institutions are quietly adding to their positions. Gold has gained $597 over the last 30 days, representing 12.89%, and $1,702 over the last year, representing 48.27%. This is not a coincidence. This is a coordinated institutional accumulation strategy disguised as geopolitical price discovery. Silver, which is both a monetary metal and an industrial commodity, is mirroring this move and will likely outperform gold on a percentage basis if the conflict continues. Bitcoin is the anomaly that confuses everyone during a war cycle, and that confusion is intentional. In the early hours of the Iran-Israel missile exchange, Bitcoin dropped briefly before recovering to $66,534. This behavior reveals something important. Bitcoin is no longer treated purely as a risk asset by the largest market participants. Sovereign wealth funds, pension funds, and institutional desks are now holding Bitcoin alongside gold as a war hedge in countries facing currency risk or potential sanctions. Iran itself has used cryptocurrency to bypass sanctions for years. When the United States imposes new financial sanctions on Iran, the demand for non-confiscatable digital assets increases across the entire sanctioned economy. Bitcoin is the only asset on the planet that no government can seize with a court order if it is held in self-custody. That is not a feature. In a war, that is a survival tool. The mainstream financial media is currently doing exactly what it was designed to do during a conflict cycle. It is generating maximum fear, broadcasting missile footage on a continuous loop, featuring analysts who are calling for market crashes, and producing content that emotionally triggers the fight or flight response in every retail trader watching. This is the institutional trap. When you are emotionally triggered, you make decisions based on fear, not price levels. Smart money, which means hedge funds, sovereign wealth funds, and the algorithmic trading desks of the top 12 financial institutions on Earth, do not watch the news before trading. They set their orders weeks in advance at pre-calculated liquidity levels. They need your sell orders to fill their buys. The media is their recruitment tool. Every time you watch a breaking news alert about a missile strike and reach for the sell button, you're performing an unpaid service for a billionaire. Looking at the live gold chart from Gold Price, org recorded at 1953 New York time on March 1st of 2026, there's a clear liquidity void between $5,280 and $5,310 per ounce. This is a zone where price moved too quickly during the initial war news spike, leaving unfilled institutional orders below the current price. Retail stop losses are clustered just beneath the $5,250 level, which represents the previous consolidation zone. If gold pulls back to test that region, it will be a calculated engineered sweep of those stops before the next leg higher. Silver shows a similar structure with a void between $91 and $92.50. Bitcoin has its major liquidity pool sitting at $64,000, which represents the previous weekly low and the area where the highest concentration of retail stop losses and liquidation orders are resting. The setup forming right now across gold, silver, and Bitcoin is historically consistent with what technicians call the war cycle accumulation pattern. Gold must hold above $5,250 on any pullback to confirm the institutional buy program is intact. If price sweeps below that level and reclaims it within the same daily candle, that is the entry signal. Silver must hold above $91. Bitcoin must hold above $64,000. If all three assets sweep their liquidity pools and reclaim simultaneously, that is not a coincidence. That is a correlated institutional accumulation signal generated by the same algorithmic models reading the same geopolitical data. The war is the catalyst, the chart is the confirmation. Wait for the sweep, wait for the reclaim, then act. Wealth is never destroyed during a war. It is transferred. Every dollar that a retail trader loses in panic selling moves directly into the account of an institution that bought their asset at the moment of maximum fear. The bombs do not destroy the money. They relocate it. Gold has survived every war in recorded history, every empire that collapsed, every currency that was printed into worthlessness, every government that promised safety and then defaulted. Right now, while missiles are in the air and governments are drawing red lines and making threats on international television, the oldest financial truth in human civilization is playing out in real time across charts that most people cannot read. The ones who read them correctly will not just survive this cycle, they will fund the next generation of their family with what they accumulate in the next 90 days. The ones who sell their gold in Bitcoin, because of a news alert, will wonder in 5 years why they missed the single greatest wealth transfer event of their lifetime.